And I'd like to invite the panel on the stage, Mr. Julian Price, Sugar Trade Analyst from London, Mr. Girish Chhimwal, Analyst S&P Global Singapore, Mr. Atul Chaturvedi, Executive Chairman of Shree Renuka Sugars Limited, and the moderator for the session, Ms. Charlotte Kingsman, Founder ECRUU. Request you all to please take a seat. They'll be speaking on Sweet Perspective, Navigating Dynamics in the Global Sugar Market. And before we start with the panel discussion, I'd like to invite Dr. Claudiu Covrig to please come and deliver his talk.
It's always a pleasure to be in India, a country that gave so much to the world, and not only to the world of sugar. Let's start because the presentation is quite big. I try to cover the main aspects. Of course, there is no crystal ball now, but we can analyze the situation as it is now, and then we will discuss this in the panel. Okay, we have many uncertainties ahead. Okay, so we fix this problem now. Actually, what is happening? This is the global picture, right? It's quite balanced. I feel more comfortable here. We are here, okay? And next year, here. What is the problem? 23-24 this year was seen in a deficit all year long. And then these were the estimates in November. The thing is why we've seen the year in deficit. Because nobody knew, not even the Brazilians, they didn't know how much sugar they have in the field and how much sugar they can crush. Generally in October in Brazil starts the rainy season. And then if you expect a normal weather pattern, then you expect that crushing will not be so big in November, in December. But it didn't happen. They didn't receive enough rains. So then they managed to crush almost all the cane they had. But hang on, they discovered that they have even more cane. So then we gradually shifted in a surplus. And the surplus was rising. Then the funds realized that the surplus was rising, and then they said, we are ahead of Christmas time in Europe, so let's execute and let's cash in a nice bonus for Christmas. And then they got out of sugar. Then what happened was the fact that in Brazil everybody said, okay, but we still have a lot of cane to crush. This is called canha bizada. So we can carry this cane in the next season too. So then actually not only the crush is big in Brazil, but also the cane in the field is big, and they carry out another 10 million tons of cane. So this determined many people go bearish, and many trade houses burned themselves because they were too bullish. Prices at 28 cents were not capable to sustain too much, and then suddenly everything crashed to 20 cents. We are looking now at the next season, because this season is generally a consensus about it. But next season, what we see, this is the world production trend. The world production trend is showing us that next season we will have a bit less sugar produced than this one. Why? Because nobody thinks at this point in time that Brazil is going to crush so much as they crushed in this season. Rains are not there, and we will analyze the situation of Brazil when we go to specific countries. But what about consumption? Well, consumption is doing the homework, the job. Okay, maybe it's not increasing by 2% per year, as it did it in the past. But even if it increases only by 0.8%, 0.9%, it's still a lot, right? Now, 0.88% increase in global consumption means about 1.67 million tons of sugar. Who's going to produce this extra sugar? Because unless consumption suffers and goes down worldwide, then we will be confronted with this problem like for a long time. Population is increasing, world population is growing, still it didn't reach the flat that some institutions are forecasting. So we will have to answer this problem because there were no investments in the sugar world. Could India help in this next season? Maybe, why not? So as we see here, this chart is comparing the rise in annual production and the rise in consumption. Consumption is with pink. So we see next season practically looking forward from 24-25, there is the normal growth in consumption, which is lower, and not too much in production. This season production still managed to inch higher, but this was mainly due to Brazil and to India that kind of sacrificed the ethanol program for having enough sugar in the country. Now, let's see regionally. Who's feeding the world? If India, for example, is self-sustained, Americas, and especially South America, has a lot of extra sugar due to Brazil. Okay, sometimes you will say it's not only Brazil, it's also Mexico, Nicaragua, other countries, but of course the big mammoth is Brazil. Now Brazil next year, as we said, might suffer because rains aren't there, because cane was not renovated enough. So then we will have a small drop in their surplus. It's a big surplus, but only 33.1 million tons compared to 34.6 this year. And if India or others aren't there, then again, we might see again prices reacting and spiking again. Now, the other chart shows a more complete picture over the last few years on regional sugar balance. We see that America is always in surplus and then the rest of the world is in deficit. The one thing that changes from this year is the fact that Asia will not increase by too much in 24-25 because they managed to reach a level of stability in terms of stocks, and production probably will recover in some regions, such as, say, China probably will have a bit more in Thailand, so on and so forth. The top sugar producers, and the numbers are here. You're going to receive the presentation. Here we have all the estimates for next season. So on October-September basis, attention, October-September, Brazil to go from 43.2 to 41.6 next season. And then India, who knows, India, what monsoon will be, how much it will be diverted to ethanol or maybe not. We maintained the current figures almost unchanged, even if there was fewer plantings in Karnataka and in Maharashtra. Uttar Pradesh could always surprise on the upper side. Then for the rest of the world, China pretty unchanged expectations for the next season, and maybe a bit more in Thailand, and Russia maybe that surprised this year to 6.6 million tons will go maybe back to 6.3. Now, what I want to stress out is that these 9 regions, 9 countries, they have a very big impact over the world supply because they all represent about 74% of the world total production. So whatever happens here in these 9 countries is with a big impact. Now, what about the stocks, okay? Because this was production consumption only. Now, the stocks this year recovered a bit. The stock-to-use ratio at the end of 22-23 are expected at 45.5%, a bit more than last year, not much more, right? Last year we had it 45.38. So it's a bit of a recovery in stocks, but mainly due to Brazilian big production and the fact that India is going to produce more, and this will remain in India and probably will not hit the international market up to, let's say, September, October. In terms of export availability, we have more rows because Brazil is a raw sugar net exporter, and less in terms of whites. Why? Because India is not there. So you see how important is India in the world market. You see, last year, for example, we had in 22-23, we had 26.9 million tons of exports on white, and then white market is including the crystal sugar, 150s, plus the refined sugar. And then this year, we are just waiting for 24.6 only. So that's why we see also very strong white premium. Next one is on the net trade flows. As I started the first slide with comparing the S&D figures with what we had in the previous year, now I went back more to compare the raw sugar trade flows, right? So, and this light blue is what the market was considering, this light blue, what the market was considering in September last year. And then how the world looked like for Q1. Expectations were about a deficit of 800,000 tons on rows, right? That's why also trade houses were very bullish. They were just telling a lot of bullish stories to everybody. And some got burned because look how fantastically Brazil came and covered all this deficit. Now practically we are in Q1 in a small surplus, 300K, then quite balanced situation in Q2, and we come back into a small surplus in Q3. As I said, specs play a very important role in the sugar market, especially in New York 11. And then this chart is showing you how prices dropped, but also the spec net position went to zero almost. Okay, so this put prices down. I will insist on the chart on the right-hand side, because this chart is comparing 3 periods, okay? So the first period, 2009-2011 in pink. The second period, 2015-2017. And then the last one is 22-24 in black. Those are the money invested in the sugar world by the net specs, not the total specs. And then what we see here is that practically this cycle, the last one, followed the previous cycle from 15 to 17 when prices spiked. And then you see the pattern is almost the same. We dropped and they never came back. The question is, will they come back? Because if they come back now, they can bring prices again to 28, 30 cents. But if they stay low, then it's the end of the story. And prices collapsed where? To the level where China or Indonesia would buy. So we are getting back to the S&D. The market was too inflated, and here are some calculations on where China becomes a good market and at which level of New York prices. As we see, I mean, China is different, okay? It has different provinces. The provinces from the north, where sugar is more expensive because it's brought from the south to the north. And there, for example, it makes sense if New York prices are at 20.7, 20.8, the arbitrage is open. Otherwise, it's closed. For the factories or for the provinces in the south of China, prices have to drop to 19.4, 19.5. So China bought some sugar. Now it's unclear how much, but generally speaking, about 400,000 tons of sugar in quota. Okay, this sugar pays only 15% duty. And then the refineries also booked some up to 200, 300,000 tons. But the problem is this, okay, so if the market corrected so much, why the cash premiums are so high? Look at the cash premiums in Brazil on white sugar, crystal sugar. Brazil is in black. They spiked. So it means that on white sugar we have some problems, okay? So somebody needs the sugar, so it has to pay. They spiked from about 100 to 135 over New York, because crystal sugar is traded against New York contract. So happened with the March premium, white premium, right? So then these prices are telling us, and the cash market, which is the market that you touch, is telling us a story, is not so bearish, okay? So with these premiums reacting. But it was not only the white cash premiums, but also the raw cash premiums that are reacting, right? Look in Thailand. Thailand is on the right-hand side. In black is this year. Last year is in, I think it's in blue. So prices in cash premiums for high poles in Thailand started already to jump from November last year. And then they jumped up to above 200 over New York. In Brazil, it doesn't matter they had a lot of sugar. They also spiked now recently. And they are now at 25, 27. So you see, cash premiums are a very important signal for us in the market. We need to watch, okay? Cash premiums, white premiums, and the spreads. Let's go to the country levels. Now Brazil. As I said, they had a very interesting agriculture yield. Look at the yield this year. We didn't see such things happening. Why? Because cane was a lot due to rains, were very good rains. They were renewing the cane was newer. So all this happened. Look at the yield per month, okay? 98 in July, 77 in October. It's a lot, okay? So this took the world, and including the Brazilians, by surprise. But will we have this next season, due to start in April? Now, this chart shows you the production of VHP, of refined sugar and of crystal sugar in Brazil. And the red line is showing you the sugar cane, okay? We see the spike in the sugar cane. For the next season, we're expecting less, not 650, but maybe 620 million tons of cane. And if it doesn't rain in February, maybe 600. But where are the investments? Prices maintained at high levels this year, 27 cents, 26.5, 28 cents even. And there was no reaction. Nothing was done, no new projects. And not only now, but also in the past. Prices spiked in 2016, in 2010. There were high prices. Look at this chart, right-hand side. New units, the new units that were supposed to come online in Brazil is the blue bar. Okay, the blue bars from 2011, the first, up to 23, 24. Nothing since 2018. Then closed units, of course, more than new units, the gray bars. So units in operation stabilized, but they dropped from 313 somewhere to 261. No investments in Brazil, just investments in switching the sugar mix, increasing the mix. Nobody is growing more cane. remember this, 13 million tons of cane, okay, less cane, can offset an increase in sugar mix of 1%. So you will say, yes, Brazil maybe will reach 51.5% mix, or maybe 55% sugar mix in 2-3 years. Okay, maybe. But then where the cane will be? Okay, if cane is not there, you can't do anything with the mix. Here we have some charts with the weather, with the rains in Brazil. And we see that really the darker lines are the most present, okay? We really see that there were no rains from, let's say, December on. Also, November was under the norm. So it's not really a good situation in Brazil. And then guess what? When people were starting to increase their cane estimates for this season, they increased also the cane estimates for the next season, like these two seasons are linked. No, they are not. The season that has to start in April is linked with the rains that happened in December, January, and will happen in February and March. So then for next season, probably sugar will be lower than this one. Well, you say, okay, but if they increase the mix, yes, okay. From a mix of about 49% this year, maybe they go to 51.4%. This means, okay, they reach a sugar production 130K higher than this year. So that's not a big increase. Okay, they had big stocks. In October and in November, they were very close to 14 million tons of stocks in Brazil. That's huge. And this compares with the black line that showed stocks last year, 10 million and 9.1 million, respectively, in Brazil in October and November. So big stocks, okay, but they managed to take out. People said, okay, it's not enough export capacity. Yes, was not enough, but they really managed to push out a lot of sugar. So now it depends how much they will manage to push out in Q1, but about 1 to 1.5 million tons of sugar, of raw sugar, will be carried into April. Let's see if there will be an incentive to dump this sugar at the expiry or not. And here, India. Okay, India, we don't know exactly what will happen next year, but if we keep practically unchanged production from this year, from 31.4 to 31.5 million tons, even though, as I mentioned, plantings didn't happen very well in Karnataka and in Maharashtra, it will be a lot of sugar in India if we reach 31.5 million tons of sugar next year. Then this means that India will have to export. Okay, if this sugar is not diverted to ethanol, India will have to export some sugar. So probably in 24-25 year, this means October 24 to September 25, we will have about 1 million tons of domestic raws exported, probably 1.1 million tons of low-quality whites, 600,000 tons of refined sugar, and then, of course, the tolling, about 2.3 million tons. So, and these exports, if they will happen, will leave the level of stocks still high, right? We see here the level of stocks. So considering these exports, we still finish 24-25 with about 7.4 million tons in stocks. So there is no danger for the Indian government to take a decision of allowing some exports if things will materialize. Here we have the India sugar balance. You will look over how much the refineries will take from Brazil. Probably next season will take less and will take more domestically because Indian sugar is cheaper than the world market. Now, Thailand. Thailand for next season, at this moment in time, we are skeptical to put a very big production. We put it 240K more than this year in terms of sugar because we don't know how the weather will behave, okay? There were a bit more plantings, but there were also many regions where cassava paid better than cane. Now, they increased a bit the area. Now, we don't really know where the area is, okay? Going from 1.4 to 1.6 or 1.7, this we don't know exactly. But in some regions there was an increase, but this we don't know how much it will help. So we can consider just, let's say, 8.6, 8.7 million tons of sugar out of Thailand next season. And this season was a bad season, as everybody expected, close to 8.3 million tons of sugar. Now the EU plus UK. EU was a bullish story last years. Now it's not so bullish anymore, and people were afraid that they will flood the market with whites. Okay, it was not the case, but of course they found extra whites to be priced now because consumption was not there. And let's look over EU plus UK annual sugar consumption. EU plus UK is in, on the upper side, and then on blue down is just the EU 27 figure. And then we see that after hitting a peak caused by an influx of population from Ukraine due to war, now consumption is coming down, as it was coming down previously, because population is not increasing. Population practically is decreasing in Europe. So from 14.62 million tons of sugar consumed in 21-22, we are coming down probably to 14 million tons only in 24-25. Okay, so about 620K drop in consumption. Could it be bigger? We don't really know, but generally that's what the models are indicating. Then, of course, UK is in imbalance, in a structural deficit, but next season also this deficit is practically expected to shrink also in the UK. In terms of production, EU 28, so aggregating everything and taking out all the ethanol, as in the case of India, because some people report production in Europe with ethanol. In white value, we shall be going from 15.28 million tons to about 15.5. So not a very big increase in production, but a drop in consumption. Total balance remains in deficit due to UK, but the deficit is smaller. So for example, in 22-23, we had EU plus UK deficit about 2.3, 2.5 million tons. Now we are going to a deficit only of 0.7 million tons, so not much. But the EU 27 to be in a surplus of about 600,000 tons. In Russia, we had a very good production this year, probably finishing at 6.6 million tons white value. So Russia has extra sugar to export, probably mainly in their region, in the CIS countries. Other countries contributing to the deficit: Mexico, a very bad crop this year, very bad crop last year too, not a very big recovery expected next year. Mexico started to import sugar from Brazil. They didn't see this in years. It barely complied with the quotas from the US. US production lately a bit higher than what expected. Next year, not much changes. Also suffers from a drop in consumption. China remains in deficit. And Pakistan, they asked for exporting sugar but acting as tolling, which was not approved. Situation is expected pretty balanced for 24-25 in Pakistan. So that's the view we have. So thank you for your attention, and we will continue with the panel.
Hello. Thanks, Claudiu, for a super comprehensive presentation. We have a panel here with a lot of expertise. Unfortunately, we don't have Robin Shaw, but he sent me a few notes that he wanted me to share with you. What I'm going to do is I'm going to ask each of our panelists to add a few notes, and I will open the floor to questions, so you can think of questions while they share some more of their expertise. I have a whole bunch of questions myself, too. So what Robin wanted to point out, which you also already mentioned, Claudiu, but was the high stocks in Center-South Brazil, and that even if the crop ends up smaller, that level of stocks could sort of compensate for the smaller crop. But of course, sorry, one second. Yes, so that was Robin's main point. And then I'm going to ask each of you, so you feel free to bounce off from what Claudiu said, anything perhaps that you would like to flag, agree, disagree. We'd love to have a few minutes, and you can focus on your own area of expertise or anything else. So Julian, you can start.
Thank you, Charlotte. Thank you to ChiniMandi for kindly inviting me. No, that wonderful presentation, Claudiu. One of the best I've heard for a long time. And yes, I think it all boils down to what is a fair price for sugar. We've seen the trade flows. What price do we need to see on the screen, including perhaps cash premiums, as you rightly point out, to encourage the trade flows to solve the equation so that those who want sugar have it and those who want to sell can sell. So my feeling is that 24 cents, which is the price you can see on the screen just now, is about right. If I had a bias, I'd say perhaps, given the enormous reliance on Brazil for 80% of, 70% of global trade, you know, the bias has got to be on the upside. I think the specs, you mentioned the specs quite rightly. I think they had a great Christmas. I think they've got a sore head now, and shocked at the way the market has behaved since the bear raid on our market. I think they'll be having second thoughts. It's all about perception, and you know, it's not raining in Brazil. Things have got to go right in Thailand. The European Union doesn't really matter, but we perhaps come on to that because it's always quite interesting for me anyway. But I'll leave it there. So I'm comfortable at 24 cents, and my bias would be for prices to rise gently.
Is there any question for me, or I can just talk about India?
Yeah, I mean, if there was anything, I mean, Claudiu was very brave putting a lot of detail out there for India, but feel free to bounce off that.
My take is I'm actually an odd man out in this group. And for the simple reason, India is totally decoupled from the rest of the world. So we are just not bothered what's happening in Brazil, what's happening, except for the punters. But let me put across one simple point. In India, there's a saying that when the marriage has still not taken place, you don't start naming the child, and you don't know whether the child is going to be a boy or a girl. And this is exactly what I want to put across. Many of the people here in the audience have been talking that the next year's crop is going to be bad. The same guys were talking in September that this year's crop is 29 million tons or 29.5 million tons and thereabouts. But look where we are. I would go to this extent of saying, and maybe put my neck out, that the Indian crop number could actually be closer to 32 million tons and add another 2 million tons of ethanol. So you're talking in terms of a 34 million tons. But just by discounting the Indian crop to 29 million tons or thereabouts, we have actually ended up creating more problems for ourselves. Government of India thought that the sugar prices are going to go through the roof, and in a panic reaction, exports banned, ethanol from juice banned. Obviously, in an election year, nobody can possibly afford very high inflationary pressures, and more so because food is definitely something which is very, very sensitive in our country, or maybe in the rest of the world as well. So the situation now is such, it's a piquant situation that you might have ethanol banned, and you might end up having a closing stock of about 8.5 million tons as against 5.5 or thereabouts, which was this year. So can the industry afford 8.5 million tons? And no wonder the industry has been asking or requesting the government to at least allow the ethanol from cane juice. And if we don't allow that, it has to be allowed now. If it's after a month or so, the crushing will be over and done with, and then the cane juice cannot be converted into ethanol because it will not be available. So my take is that we need to take the forward predictions with a massive, massive pinch of salt. I am no expert on sugar. If I am a little bit of an expert, I'm an edible oil man. In edible oil, we don't predict crop 1 year hence. Obviously, you have Adsali, which we call, or 18-month crop or whatever. But predicting next year's crop can be dangerous, and it can even make the policymakers take decisions which in the normal course they might not. That is my simple submission. And what's happening to the rest of the world? Indians, except for the punters who play on the New York Exchange or on LIFE, for the rest of the country, it has absolutely no meaning whatsoever. And that's the reason why I said I'm an odd man out here. Thank you.
How about you, Girish?
Yeah, hi, thank you, ChiniMandi, for having me here, and Claudiu for a nice presentation around the global sugar review. So yeah, I was actually taking up a few notes on the presenters and the speeches made before, and it's really a question that we have been asking ourselves and answering around estimating and navigating global sugar markets basically is the question between affordability and availability. So since we started this season, there were a lot of question marks about availability, and especially so in Asia. And in the second half of last year, there were a lot of actions being taken around Asia, because here the governments are really keen to also look at the affordability aspect of sugar, especially when inflation all around is running high, and nobody wants negative headlines on those aspects of one of the major food components. So when availability is under question and affordability is the victim of that view on availability, we must, as I said, wait out to see how the availability pans out. And since we are in the middle of the crush in Asian crops, we see that availability is turning out to be better than expected. And Brazil has already done its role in terms of making better availability to the market in the last crop itself. So from an Asian point of view, I tend to agree that going into 20, or let's say 23, 24, the remaining part of 24, we see that the global sugar picture is in a surplus. Although I differ from Claudiu's point that the surplus is small, we see about 6 million tons of surplus in production and consumption globally during 23-24. So that brings to the question that what happens if Brazil does not produce next year, or there is a problem in stocks, and which also points to what Charlotte mentioned from Robin's comment, that there is sugar in the stocks, and there is some degree of I would say insurance in terms of stocks in Brazil. And I think Claudiu also showed us that how the stocks in Brazil by September of 2024 are going to be about 2 million tons higher year on year, assuming we crush about 20 million tons less cane already next year. That is what we are also thinking. So in that sense, overall there is some degree of insurance in terms of stocks that have already been produced by March, let's say globally, also in Brazil, but also in Asian production, which is going to be mostly over by March and April. So in that perspective, 2024-25, we see there is going to be a deficit in production, which is going to be driven by Asia, because India is again going to be in a downtrend of production. But there is a comfort in terms of stocks that are produced in Brazil and are going to be produced in Brazil due to the wide arbitrage between sugar and ethanol prices from current levels. If prices go higher, that arbitrage will obviously keep on increasing, because we don't see ethanol prices going higher due to other feedstocks being in surplus in globally, like corn in Brazil and as well as in US. In that scenario, Brazil's 2024 crop and the price and production decisions will have to factor in that how when you have stocks already present, which has an insurance for the production in 2024, and despite production going down in Asia in 2025, we will still be able to match out unless we have a serious weather disruption. So weather is going to be again a key element in deciding the availability, but definitely as compared to 2023, in 2024, the weather will play a lesser important role, because we will have stocks that have been produced in the different origins.
Can I add one more thing? In fact, I would probably beg to differ that the next year's crop in India could be lower than what it is this year. It could probably be higher, because what we are hearing is that the monsoons will probably be much more normal than what they were last year. And last year what really happened was the August rains were the culprit. In August, we practically had no rains in both Karnataka and Maharashtra, with the results that obviously cane development suffered big time. But come October, November, that was compensated and compensated big time. That's the reason why you're seeing, in fact, I was telling my friend there that we were factoring in production about 1 million ton of cane less in our plants. Now we are towards the fag end of the season, we probably are higher by 1 million ton than what we were practically anticipating. My only contention in all this is the government needs to have much more stronger data before they take knee-jerk reactions. Because this year, India's decision of banning exports and also banning cane juice ethanol is not something very, very healthy. And for the simple, but we can understand that the government was in, they wanted to keep the sugar inflation in check, which is perfectly all right. But in the bargain, what has actually happened is, India has done a great service to Brazilians. The Brazilians are laughing all the way to the bank, and poor Indian sugar industry is struggling. And they can't even divert more cane juice into ethanol. So I think predicting next year's crop and then taking a decision basis, that could actually end up being counterproductive.
Thank you. We are almost out of time. I'm just trying to see if we have a few questions. Maybe we can take, can't see very well.
There's somebody there.
I see a hand. Oh, yeah. If you can give him a mic. Yeah. Or maybe you can speak.
Can somebody?
We need a mic. Yeah.
Somebody from the organizers, Mike. I've been talking too much. Let me take this one.
My question to Claudiu is, since the presentation was really good, first of all, my question is related to China. What we are hearing is China is sitting on a very low government stock, and they could come, and the parity is, right now they are in a disparity, and the trading at about 19 cents. But since they are sitting on a very low government stock, do you think that they will come up and increase, come up and try to increase the stock for the country, and hence the price is likely to go, the flat price likely to rally?
There's an echo, so it's a little bit difficult to. Can you repeat your question, please? Did you? Yeah, because of the echo, it's not easy to understand.
Can we increase the volume on the monitors, please? Cordless का mic. मॉनिटर पे इंक्रीज कर दीजिए.
Maybe.
ऊपर नहीं आवाज आ रही कुछ भी.
I can take this, and then, so China is very political, okay, that's clear. And because you have, as a state, make happy all the market participants. You have to make happy the producers, the importers, okay, the refineries, and give work to your people. Now, what happened last season was that many refineries, they didn't use their automatic import license, so the quota to import. That was allowed to them. Now, these imports, automatic import licenses, they are coming at a high tax, 50% duty on this sugar. Now, if the refineries have to pay 50% duty, then you can see that if you study the last 2-3 years, you can see that not many times the import arbitrage was open. So last year they didn't use their import quota. They took probably maximum 500K, 600K from the world market, when the total import quota under this scheme, so paying 50% duty, was about 3.6 million tons, maybe even 4. So they didn't take almost nothing. Now, what happened then with China was that, okay, prices were high, the government had to do something. So what the government did was to rotate stocks. What is this stock rotation? It's like, okay, we are replacing the old stocks with the new stocks. So then, generally, the government of China is delegating this responsibility to some companies. One of them is Covco, but also Wilmar took something, and so on and so forth. So they were able to bring in some volumes that paid only 15% duty. Okay, under this scheme, the imports were in the money. It's okay. But the problem with this second scheme is the fact that you have only 1.94 million tons to import into China. It's the maximum amount, 1.945. That's it. That's the total. Once you reach this level, you cannot import anymore unless you do this rotation, right? The government is doing extra. Well, last year this happened. So they maximized the imports under the in quota. It was not all raw sugar, okay? It was also about 300,000 tons of white sugar in this 1.945. And then they rotate some stocks. So this means that the levels of stocks in China, when they opened in October, they were not incredibly low. As you might know, China likes to sit on big stocks. Right? So it was lower than last year, okay, than in October 2022, but not so low. And I'm just saying, just roughly like you have the governmental stocks, you have the stocks of the companies, you have so on and so forth, many stocks. So all together were about 9 million tons. So we're not talking about zero stocks, okay, in October. Now, will they don't like 9, maybe they like 12, or maybe they like 11, okay, or maybe 9 is not correct and it was 8 due to this rotation. But the thing is that they were already sitting on big stocks. Now, they can afford to continue with this program and import only what they imported last year, because production this year is 1 million tons higher. Okay, so China will produce 1 million tons more. Consumption is flat, and actually many domestic players were cutting down consumption in China due to many reasons. One of them is lower economic growth, others that the competition from HFCS, so on and so forth. So consumption generally kept at around 15.3, 15.5 million tons. So keeping consumption unchanged, then you have just production that is making the difference and the imports. Now, some sugar has been already contracted by China for this season. It was contracted mainly in quota, okay, generally Covco, but the thing is that the new automatic import licenses have not been issued yet. Okay, this program is approved mainly in April, May. So if they would import now this sugar from Brazil, let's say prices go back to 20 cents and they import a lot, they have to keep this sugar without doing the custom clearance of this sugar in the bonded area and then wait for the licenses to be issued. Now, refineries this year didn't import too much up to now because they loved prices at 20 cents and they expected that prices will collapse even more, go to 19 or to 18, to be in the money, more in the money, not just barely in the money, okay? So related to your question, this I had to clarify for the audience, okay? So related to your question, yes, they can stay with low imports like last year because stocks are not as bad as exaggerated and they produce 1 million tons more. But I don't think they will really stay. I think maybe the market will give them opportunity to enter the market. And if not, yes, at 24 cents, the in quota will be anyhow booked and the rotation of the stocks that the government is planning. The question will remain on out of quota, the 50%. That could again remain low.
Thank you so much. We've been informed we need to wrap up, so I'd like to thank our panelists and Claudiu for this session, and they're available if you have any questions after. Thank you.
Thank you very much. Let's have a round of applause for the panel, everybody. And I'd like to invite Shree Naiknavre to please come up and present a token of our gratitude to the entire panel, starting with